Hope this message finds everybody doing well. Just for a point of reference, today's Saturday, April 5th. So it was quite an interesting week for all of us. If you are a 30-something, welcome to the party. If you are a 50-pluser, then we've been here before. It doesn't make it any more pleasant, and it certainly wasn't fun. But I do want to remind everybody that these are the times that advisors grow. These are the times that we earn our money, and these are the times where clients want help. When everything is just going up and you call a client and they're up 20% because they own all those stocks that they've owned for the last 10 years, not really much use for you. So what I want to help you with today is, what should the conversation sound like next week? What should we be careful of? And hopefully, how do we navigate through this process? So first, very, very important, we need to reach out to clients. They need to know that we are in the corner, that we are watching, and we were there to help them. So very important, I think, this week to talk to as many clients, 10-minute calls, just having a general sense of where they are, and what does the conversation sound like? First, explain to the clients exactly what has happened up to now. We go into the year, into 2025 with a very expensive market. A lot of people are talking about the market's price for perfection, and it was. So we come in at 23 times earnings on the S&P, and we had those the Magnificent Seven coming into the year represented almost half of the returns of the S&P for the last 10 years. So we knew that we were in somewhat, of a difficult environment to start. Then we started to see this AI trade, not completely unwind, but certainly start to unwind to a certain extent. And so that also started to create some pressure. That was the news out of China, with DeepSeek. And so again, we felt that about a month ago. And then finally, it's this whole tariff situation, which has obviously been extremely problematic. Going into the tariff conversation, the thought was that we would have, reciprocal tariffs, which again, I'm not the politics, and I have no interest in the politics, but that was the idea. Reciprocal tariffs, I guess, kind of makes sense to a lot of people. But what we ended up getting was something that was not reciprocal tariffs. So, and obviously the market reacted extremely negatively over the last couple of days. And we find ourselves, in somewhat of a correction mode. So first we want to explain to the clients, what's kind of happened. Then remind clients, because now what clients are going to do, you're going to have two kinds of clients. You're going to have clients that say, this is a disaster, get me out. And then you're going to have the clients that say, wow, this is a great buying opportunity, let's go all in. So let's talk about the get me out client first. We cannot get out, but we have to remind them that really when we look at their financial plan and we look at their asset allocation, that nothing's really happened other than it was a really rough week, and it might be a rough month or a rough quarter, maybe even a rough year, before this works out. But at the end of the day, because one comment, from the president, meaning that, hey, we're going to give everybody 6 months to, figure out where they want to be as far as reciprocals, all of a sudden the market snaps back. So we cannot be in a position to just be selling people out because they're afraid. And so we have to remind them that unless they need the cash that is sitting in equities today in the next 18 to 24 months, and when we show them that we've already allocated or we've already allowed for the next 4 years worth of liquidity, and here it is, so that whatever happening in the equity market's not really that relevant, then they can understand. Because what we can't do is get into a situation where time in the market. The other clients that think this is the buying opportunity of a decade, let's be careful also. If a client has $100,000 or $1 million that they want to allocate to equities and it's a long-term investment, then on Monday we will be allocating about a third. Because the reality is it probably is a pretty good buying opportunity, certainly ultimately. But there's also a reasonable possibility that if the administration is stubborn about the current position, that we could be down 25% in the S&P before it's over. I'm not making predictions. I'm not a prognosticator. I'm not even that smart. But it's certainly possible. So again, the idea of legging in, and also if we get a bounce back early this week, maybe Monday, which would be my best guess, that doesn't mean we have the all clear either. So we don't want to get too excited and we don't want to get too nervous. But again, the most important thing is to remind the clients that yes, the market has come down, but if the financial plan hasn't changed and if our allocation matched our financial plan, then nothing changed for us. We'll do some tax loss harvesting, we'll do some rebalancing, but it's a great time to reach out, Let them know that you're there. Let them know you're in their corner. Let them know that you are aware of what's happening and you understand exactly how it's impacting, their accounts. Now, for us, and probably for most of you, because we are, asset allocators, because we believe in diversification as most advisors do, up until Thursday or through Thursday, our portfolios were pretty much flat. So, the value was up, the international was up, the gold and silver was up, our multi-asset strategy was up, our healthcare was up. Now, we had a bunch of things that were down, but because of diversification, including bonds, we're basically flat. Now, I'm sure after Friday going into Monday, we'll be slightly negative. But don't be afraid to remind your clients that, yeah, maybe the S&P's down 15 or the Nasdaq's down 20, but you're not. Because remember, if you're in a diversified portfolio, we've been pretty beat up over the last bunch of years. How many times do clients say, why is the S&P up 20 and we're only up 14 or we're only up 12? So make sure that you point that out to your clients and get some credit for that. And let them know, that whatever happens, you will guide them through, you are there for them, and everything will ultimately be okay. The only thing that matters in a market like this is that we have the proper liquidity, so we're not selling equities when the markets are down, when those stocks are less valuable. Anyway, I hope this is helpful. Remember, this is the growth opportunity that if you're a younger advisor and you're in growth mode, or if any advisor is in growth mode, this is the opportunity you've been waiting for. This is when money moves. So don't hide under your desk. Don't get paralyzed by this. Talk to your clients. Remind them that you're here to help them, but you're also here to help their friends and family. If they're talking to anybody that seems very upset or very concerned about their position, it's probably because they're not allocated properly and that you would be happy to have a conversation and help them. Anyway, have a great week.